see another opportunity in it. But then you've got to ask yourself, am I chasing that loss? Am I having that revenge trade mentality? Or do I genuinely see another opportunity within this stock, within this trend? It's a very difficult thing to maneuver because we all know when you get that FOMO, when you get that revenge trade mode, it can be a huge detriment to your trading because the revenge trade where you just sit there and keep hammering at the losing idea is the exact kind of thing that blows up accounts. That said, there will be opportunities where you have just taken a hit in a stock and there will be great setups. And if you're able to have the self-discipline, the patience, and the observation skills to be able to see those, it can be to your advantage. So you want to make sure you have it in your toolbox, but you've got to be careful. So you got to follow a few steps here. Now, look, the first thing that you gotta understand is there are different levels to, okay, when should I get back into a losing trade? So this could be, I've taken a hit on a stock, I took a trade, I got out, and I'm looking for another trade at maybe a different price. That can be a little bit easier to do. You could get stopped out and you could look for a re-entry at the same level. That's another way that this could play out. But the other way that sometimes is a little bit trickier is sometimes you take a hit but you haven't gotten out of all of it and then you sort of jump back in. You take out half, you get back into half. You're still kind of averaging down. That's the third one, and that is by far the trickiest thing to do. You got to be very careful if you're doing the third. But the first, where you simply get out of one trade, see a different opportunity in the same stock, I'm going to walk you through it because it happened to me today. I thought I was with the trend on this on Alphabet very early on in the day. It's pretty easy to see. The NASDAQ was, strong at the open, pressing higher, at least holding some highs or at least holding the range, whereas Alphabet was just tanked at the open. So right away at 9:30, the stock is tanking, it consolidates, and then it falls even lower. I had a key 140 level marked off. So the second, I'm like, okay, if it holds and bounces, which it bounced initially, right there, it bounced off the 140. I'm like, okay, if it bounces there and takes it out again, I'm just gonna go for the short underneath. I like the trend into the downside. That was the setup. It did not hold underneath that support level. So I ended up getting out. So now I've lost on a short, but I'm pretty convinced that the trend is still to the downside. So when entering a trade which is going to be different, I have to look for a new setup. Because the one that didn't work was the breakdown at the 140 level. Now maybe I want to short that again underneath 140, but I've got to ask myself, if the trend is still to the downside, what would I be doing had I not made that first trade? If I didn't look at the 140 level, if I didn't take that trade, what would I be seeing in front of me? That's the first thing, because it's so easy for me to say, okay, well, look, it just held 140. Here it is wicking 140 again. I'll just wait for it to get underneath and take that short. So it bounces 140, bounces 140, bounces 140, and maybe I short it over here when it finally holds underneath that. That's all well and good, but that's taking the same initial idea and then waiting for it to set up a little bit better. There's nothing wrong with that. A lot of patience required to do it, but there was something else. Had I not done this trade and was not anchored to 140, which I did, but I didn't stay anchored, I simply looked to a different setup. That is the initial bottom right at 9:30, held 140 and a half, and the next setup is when it broke my stop, look what happens. It rejects right in front of that initial support level. And then suddenly you've got yourself a lower high in the trend to work with. So a completely different trade, but my notion was to go with the trend. It would have been perfectly valid to go back to the original idea that lost and wait for it to set up again. It would have taken an hour to do so, and it would have worked. That said, there was a different setup. So you've got to be able to tell yourself, okay, is there something different that I can be doing that I can set up a second time through? That can be a little bit challenging because it requires you to not anchor to your price. Do not get anchored to price in a situation where you've taken a hit. Always look for different opportunities out there for you, because you might find that being a little bit more patient with your pricing is going to be the way to go. So I showed you one that really, really worked, and that's Alphabet. But I'll give you an idea of why that matters in practice, because this is a little bit different because I'm talking about where you get a losing trade. In this case, I scalped for profit. but it did end up trending against me. So if you look at ARM was a short for me, trending to the upside. And the short that worked was it tipped to 150, then the lower high at 148, short off the 148 level. It works, we reload it, it actually ends up failing this high. So it's holding higher lows and you're trending against. But I was shorting the same price there. And what can happen when you get anchored to that same price is you might miss out on the bigger opportunity. Again, if you only ever anchor to that original idea, it ends up breaking, failing 150, which is a good short, and then you're not taking it until all the way in here at 1130. That is not necessarily a bad thing. If the worst thing that happens to you is you have an abundance of patience in a stock which was trending against you or something that didn't work initially, that's not a bad thing. But sometimes you do want to say, if I had not traded it at all and was looking for a short, what would I want? Maybe a failed break at the top because that did set up. So you've got to find ways to try to take yourself out of that original idea, say, if I was flat, if I had not done it, what would I be doing next? And if the answer is I wouldn't be trading it, then you've got to just flip to another stock. Because if you don't see something and you have a red sitting there, it is so easy to just chase that P&L that is gone for no good reason. Now, the other thing that I think you want to consider is when you've taken multiple cracks at something and it isn't working, like what makes you do it that extra time? So I'm going to go through here something on Tesla for myself where I was trying to play the long and it just wasn't working. Like everything I was doing was sort of okay, but it wasn't working. So the initial idea was I wanted to buy the dip because it was trending higher, I get a nice bounce play, then I stop out. Now look at that stop out. Like it's about as bad as it gets. Like you end up hitting almost a bottom wick, it continues to go higher. Then I say, okay, I want to take a breakout at 200. I get the top wick, so I stop out at bottom wick, I get the top wick, it pulls back into the level that I wanted to hold before. And at that point, it is so easy to have FOMO. It's like I had it here, stopped out at the bottom, then I take the top, and it ends up holding the bottom after that. It's like, oh goodness, what am I going to do? So once again, if I had done absolutely nothing in this stock, and the easiest way to think about this is if you find yourself in that spot, zoom out, maybe don't look at that time frame again, look at the bigger picture time frame. So the first thing I did was I pulled out my 15-minute chart and reassessed the overall trend here. And I said, there's my 198 resistance. There's last week's 200-ish top. Let's go back to square one here. Holding the 198, stair-stepping it up in the morning, the 200 breakout, it's still very much valid. So I might be down on the stock and I might have had a bad read on it, but I zoomed out, and that is a trade I'd take 10 times out of 10. And if it's a stock that you would take 10 times out of 10 on a setup, you've got to be able to go back over to it no matter how bad, whatever you've done before is completely irrelevant. And the other factor here is it's set up in every way possible. It fail broke once, great for the shorts, and put in a higher low. It fail broke twice, put in a higher low. Lots of shorts are looking at it at that point. The third time through, I always think is, I wouldn't short it the third time usually, so I always look for that long opportunity that third time. And in this particular situation, remember, like I don't think I could have done it worse on the way up, but you still got to find a way to get into that trade. Now, don't get me wrong here. If you find yourself in a spot where you take a couple of hits like this and you'll be taking trades that aren't setups for you, then you've got to go back, maybe paper trade it, have your own rules for limiting losses. But if it's something that you would do 10 times out of 10 when you zoom out, reassess, then it's a trade that you almost have to have. And the key thing here was, I may have gone 0 for 2, but I was looking long into a long trend. So when a great long setup happens on that same trending stock, I've got to be over to it. Now, had Tesla been making lower highs and lower lows, would I have taken a breakout trade after going 0 for 2? Of course not. That's a completely different story. So when you take a hit or a series of hits on a stock, you've got to ask yourself, am I looking for a new trading opportunity that I would do when I was flat? If the answer is yes, and it's a positive expectancy, you want to do it. Am I willing to look at a different price level than the one I was married to before if that's the best setup? If you're not willing to do that, then you've got to take a step back once again. Reassess the trade. Don't be married to the original idea. You might have new ideas on the stock. And then the third thing is, if you have 2 or 3 losing trades in a row on the same stock, but you feel like it's still setting up for you, then go all the way back to square one. I might zoom out to my daily chart, zoom out to my 15-minute chart, reassess it like I was starting the day off anew. Not just the price action that I've seen at the open, but if I was starting the day off anew and I saw this here, what would I do? And if it's still an A+ setup then you've just got to suck it up and make that trade even though you've gone 0 for 2. I could not have done worse in terms of timing on Tesla today, but you had to take that third trade when it's set up perfectly. That's your lesson of the day. When can you get back into a stock that you've taken a hit on, and how can you do it carefully? That's the real deal. You've got to be able to have that in your toolbox.